My dividend growth portfolio just hit an all-time high. So in this video, I'm going to be going over exactly how much dividend income I made in the month of June. And to break this down, we'll be looking at my investment dashboard, my dividend calendar, my daily dividend calendar, and like always, we'll be projecting out my future portfolio to see exactly how long it will take me to achieve my long-term goal of one day being able to live off dividends. And like always, if you'd like to be able to download this spreadsheet and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. Ticker Data is currently running a July 4th sale, so you can get the premium annual plans at the cheapest price ever by using code FREEDOM at checkout. I'd also like to say thank you to Seeking Alpha for sponsoring this video, but more on that later. Let's go ahead and dive in. Now, like I mentioned earlier, my dividend growth portfolio is sitting right at its all-time high of $218,000. And this comes after the S&P 500 also just hit a new record high. So my portfolio has definitely been riding the waves of the market. And for example, one of the largest positions in my personal portfolio, in fact, the largest individual position, not including ETFs, is Microsoft. And we can see it's trading at an all-time high as well. In just the last month alone, Microsoft is up over 8.4%. And if we look at this position in my personal portfolio, I'll blow up my growth chart. We can see I'm up close to 90% on my Microsoft position. And if we go ahead and zoom in a good bit closer, we can see about $60,000 of my portfolio completely comes from gains. So obviously that's very exciting to see. If we come down here, we can see my cash position sitting at about $19,000, so about an 8% cash position, so definitely ready to have some capital to deploy. And my total holdings is 28, but I actually added a new position to my portfolio this month and removed a position as well. Now, the position I sold out of was Intel Corporation. This was a very small position in my portfolio and it performed pretty poorly. But I must say, the reason I'm selling out is not because it hasn't performed well over the last year, it's because I think there's much better opportunities on the market right now. It's important we don't let sentiment around a certain stock impact our investment decisions. But the stock I added to my portfolio is actually also down quite a bit in the last year, and that's Novo Nordisk, ticker NVO. Now, the goal of this video is not to do a full analysis on this stock, but we have to remember, the end goal of my portfolio is to be able to one day live off dividends. And if we look at the dividend metrics for NVO, we'll come up here and plug in the Danish ticker for it, which is its home country. Thanks to ticker data, the data will load in and we can see that starting dividend yield sitting around 2.61%, but more importantly, they've been growing that dividend at a very high rate. Look at the 5-year dividend CAGR sitting at 21.53%. So the amount they paid out in dividends has more than doubled in just a short time period. This is the exact type of thing I'm looking for in my portfolio. And we'll touch on this more later in the video. Now, if you want a more in-depth analysis of why I actually added Novo Nordisk to my portfolio, I'll be talking about it in my free newsletter in just a few days, so you can check that out at the link in the description. But if we keep moving forward, we can see I have two charts here to track the performance of my individual positions. We have cost and market value, so we're looking at the cost of each position versus the actual market value. So for example, Microsoft, I've invested a little over $9,000. That position's currently worth closer to $17,000. If we look at Visa, I've invested around $9,500. That position's worth closer to $15,000. But in a lot of ways, it's best visualized by simply looking at the growth of each of these positions. Now, obviously, we can see there's a huge outlier here. My best investment ever, Broadcom, stock ticker AVGO. Not only have I seen a lot of share price appreciation, but they've grown their dividend at just a mind-blowing rate over the past few years. But we can see I'm up over 430% on this position right now. It makes all these other positions that have actually performed really well not look quite as good. For example, my Caterpillar position, I'm up over 121%. JP Morgan, up over 173%. Microsoft, which I already pointed out, up over 88%. And there's some other huge winners here. Ultra, over 52%. Coca-Cola, 55%. EPD, a big dividend payer actually, up over 61%. And this one's actually a pretty high yielding stock, so if you know what to look for, there can be opportunities for a lot of share price appreciation with high yielders as well. Now there's plenty of other winners here as we can see, but one of the things I do want to mention is we can see my ASML position right here is starting to grow. And this is a relatively new position. I started adding to it a few months ago, as you know if you've been watching the channel, but I'm currently up about 19% on this position. I expect there to be a lot of volatility in the coming years with this position, but I think it's well positioned for the long term to see a lot of free cash flow growth, to see a lot of earnings growth, and as a byproduct, it's going to grow those dividends at a high rate, which is what management has stated they'll be doing. Now, the huge problem a lot of people have when they look at their portfolio, they see different positions that have been performing very well. They look at the S&P 500 and seeing it at an all-time high. They start to ask themselves the question, is now still a good time to invest? And I think deep down what they're thinking is, I can't buy stocks now. I don't want to buy at all-time highs. We've definitely all been there before. But what history tells us is this is one of the biggest mistakes we can make. And again, this is something I was talking about over on X/Twitter the other day. What research has told us is that stocks have typically spent about 2/3 of the time at or within 10% of an all-time high. So being at all-time highs is actually quite normal. But what's important to remember, it doesn't mean the market is just going back to its all-time high and dropping and then hitting that same high. The highs are continually getting higher and higher. Look at this chart out from 1970 all the way to about 2024. We can see the market is constantly hitting new all-time highs. In fact, if we look at the S&P 500 all-time highs by decade, in the 2010s, they hit 242 different all-time highs, and in the 2020s, they had already hit 110. It's actually more right now since this data is a little outdated. So no, this doesn't mean the market's guaranteed to go up over the next month or over the next 6 months. But it does mean if you're investing for the long term, you shouldn't be too concerned about investing at all-time highs. Now, I want to go ahead and get to what everyone wants to see, and that's exactly how much dividend income I made in the month of June. And it was a very high month, actually my second highest month ever. If we go ahead and look at my dividend dashboard and zoom in, we can see in the month of June, I made $1,172.28 in dividend income. Again, that's my second highest month of all time, very close behind December of 2024. And when we look at my historical monthly dividend income charted out, there's a clear trend we can see here. Now, some of you might be thinking, okay, $1,000, that's a lot of money, but for someone who has a portfolio size of about $218,000, I think you could make a lot more in dividend income. And yes, you're correct that at this very moment, I could certainly maximize my dividend income in other ways if I chose to do so. But we have to remember, the goal isn't to maximize dividends right now. My goal is to be able to maximize dividends over the long term so I can live off dividends. Now, what's the difference? Well, I'm so glad you asked. Let's look at a little example. Here we have 3 of the larger positions in my personal portfolio: Visa, Microsoft, and Broadcom. Now, oftentimes people look at these stocks and aren't interested because they have a very low starting dividend yield. For example, if we look at Visa, starting dividend yield right now is just 0.68%. If we look at Microsoft, the dividend yield about 0.67%. And if we look at Broadcom, the starting dividend yield is just 0.87%. So why would anyone wanting to one day live off dividends buy these type of stocks? Well, let me show you. Let's look at how much each of these positions paid out per share in dividends in 2024. If we come up here using the ticker data function, we'll select Visa, we'll select dividend, and then type 2024 and hit enter. And we can see they paid $2.15 in dividends. If we drag this formula down, we can see Microsoft paid about $3.08, Broadcom $2.17. So if we take the amount that they paid in dividends multiplied by the shares I owned, we can see how much I made in dividends from each position, and the total dividends I received was about $263. But that's not how much I actually made from these positions. Now, there's a difference in earning in dividends versus how much each position is actually making you. And when we're talking about how much they're actually making you, we look at free cash flow per share. And I'll show you here what I mean in just a second. But we'll go ahead and use that ticker data function, come over here and select the stock ticker, free cash flow per share, and then 2024 and hit enter. The data will load in and we'll drag this formula down. And now we can see how much each position made in free cash flow per share. We'll multiply it by the shares I owned, and we can see the total free cash flow earned from each of these positions was $958.83. So that's the total free cash flow I earned, but this is the total amount that was paid to me in dividends. Now, why is this relevant? Why would we not only care about how much we're being paid in dividends? Well, we have to remember dividends are paid out of free cash flow. A company can literally not pay out more in dividends than they earn in free cash flow unless they're taking on debt or weakening the balance sheet. But on top of this, we have to make sure we understand capital allocation. We have to remember when it comes to free cash flow, a company has 5 different options. 1, they can reinvest back into the business, they can do mergers and acquisitions, pay down debt, they can buy back shares, or pay out dividends. So if a company makes $100 in free cash flow and they pay out $100 in dividends, it means they can't buy back shares, they can't pay down debt, and they can't reinvest back into the business. And if they're not reinvesting back into the business, it's going to be really difficult to make more free cash flow in the following year, meaning they're not going to be able to pay out more in dividends. And a company that can't increase the amount it pays out in dividends every year is actually paying out less in dividends each year due to inflation. So it's absolutely critical that we pay attention to how much they're generating in free cash flow, not just in dividends. Because these companies that grow free cash flow at a high rate also increase the dividend payouts they make at a high rate. For example, let's look at Visa. Look how fast they've been growing the dividend over the past decade, 10-year dividend CAGR of 16.8%. This is exactly what I'm talking about, and they're only using about 22% of their free cash flow to pay out dividends. To visualize this even more, look at this charted out. Look at an example of a dividend growth stock versus a high yield stock and how much they're paying out in dividends over the long term modeled out. Yes, the high yielder is going to pay you more in dividends for quite some time, but because dividend growth stocks increase their dividend payouts at a high rate, they eventually start paying out more in dividends. Now, in this example, we're assuming we don't reinvest dividends. What if we do reinvest dividends? Well, the same is still true, it just takes a little bit longer for dividend growth to actually surpass high-yielding stocks. If you can understand this concept, you'll be better off than 90% of people who call themselves dividend investors. So the short answer is yes, I absolutely could be making more in dividends right now. I understand that. I know the options with covered call ETFs and other high-yielding instruments. And the day will come where I actually start utilizing more high-yield options as I get closer to living off dividends. But as for now, the focus should be on dividend growth, and I think it's going quite well for me so far. We can see my expected yearly dividend income sitting at $6,707, meaning on average, every single month, I'm making about $559. It's a great feeling knowing if I stopped reinvesting dividends right now that on average, I would still have about $559 coming into my account every single month. And because I'm holding dividend growth stocks, this amount would actually continue to increase every single month, even without reinvesting dividends. Now, something else that's really interesting, just to reiterate how powerful dividend growth is, I want you to look at my yield on cost of my Broadcom position. Now, again, we looked at Broadcom earlier. The starting dividend yield for Broadcom right now, if we look at it, is sitting at just 0.87%. But I want you to look closely at my yield on cost for this position. It's 4.43%. Why is that the case? Well, two reasons. I was able to buy into this stock at a great valuation when the starting dividend yield was higher, but also they've been growing that dividend at a high rate. So simply looking at that starting dividend yield at times can be a bit deceiving on how much it's actually going to pay you. On top of this, if we come up here, we can see exactly where my dividend income is coming from. Obviously, a lot of it's coming from my ETF SCHD, which made a very large dividend payment to me this past month, but about 12% is coming from real estate. We can see technology around 6%, financial services around 5.9%. If we look at consumer defensive, 7.9%. Fairly well diversified overall. Then finally, I want to look at my favorite charts. I want to look at my projected annual dividend income month over month. Now, what you'll notice about this chart is pretty rare when it comes to finance. Typically, when we look at share price of different stocks, you'll see it go up. Maybe you'll see it go down a lot. You'll see it go up, go down. It's a never-ending cycle. But when we talk about projected annual dividend income, if you're doing it right, your projected annual dividend income should basically almost only go up every single month because you're adding new capital, you're reinvesting dividends, and the stocks you hold are growing those dividend payments. And that's essentially been the case every single month for my projected annual dividend income, with the exception of 1 month here, which is actually because I sold out of some higher yielding positions. Now, this is incredibly motivating to know that even in a month where the market goes way down, like in April of this year when the market tanked, my projected annual dividend income still continued to climb even higher. So the amount I'm getting paid on average every single month goes higher as well. This is a great example of the power of dividend growth investing. And then if we simply look over here, we can see some of the positions that are paying out quite a bit to me in dividends. We have stocks like Altria, close to $400 a year, Vici, almost $500 a year, Texas Instruments, not bad at about $182, and then my big dividend payer, SCHD, about $3,728 every single month. Now, I want to jump over and look at my dividend calendar, but first, I want to say thank you to Seeking Alpha for sponsoring this video. Seeking Alpha is one of my favorite investment research platforms, and they're actually currently running their largest sale of the year. And this price is actually cheaper than the price that I originally bought Seeking Alpha at a few years ago. Now, this is a tool that I use on a daily basis, and you know it's true because I use it in literally every single video that I make. They keep you updated on trending news. There's plenty of great research articles, but you know I love it for the stock analysis. For example, let's take a quick look at Nike. We can see a summary of how they performed over different periods of time. We can see different analysts' analysis. We can see the news surrounding the stock. Of course, we have the financial statements. We can see earnings reports, what to expect from upcoming earnings, and we can see key dividend metrics such as the dividend scorecard, yield, growth, dividend safety, and of course the dividend history. But one of my favorite things to do is to compare how they're performing against their peers, and Seeking Alpha makes this quite easy. We can see them versus their peers listed out right here, how they've performed over different periods of time, but we can actually change the metric that we want to look at as well. For example, if we wanted to look at revenue growth year over year, we can see that charted out. If we keep scrolling down, we can see pretty much any metric that we need. So Seeking Alpha is a tool that I've been using for years, and that's not going to be changing anytime soon. So if you've been interested in Seeking Alpha, now's definitely a great time to check it out. There's a 7-day free trial, and the price is the cheapest it's been all year. Now back to my portfolio, let's take a look at my dividend calendar. Now what is a dividend calendar? Well, basically we're just looking at each position and seeing how much they're paying out in dividends. We can see how much I'm making each month in dividends. But most importantly, it allows you to very easily chart your dividend growth over time. And the example that I always love to use is Realty Income. Now, the reason that's an easy example is because they pay out dividends every single month. So for example, I started using this dividend calendar in January of 22, and Realty Income paid me $5.83 in that month. But if you'll notice, each month that number is climbing higher and higher. And again, that's due to 3 reasons. I reinvest dividends, they grow those dividend payments, and I'll occasionally add more capital to this position when the opportunity is right. So you can see by January of 2023, those dividend payouts were quite a bit higher. April of 23, again, quite a bit higher. And if we keep moving forward, every single month, it's growing higher and higher. And if we look at this most recent month, they paid me about $29.26. So the amount they're paying me each month in dividends has grown pretty dramatically. Now let's go ahead and look and see how much I made from each stock in the most recent month. To start off, Johnson & Johnson, about $33. We can see Microsoft, $28. Realty Income, $29. Bank of America, close to $24. Domino's Pizza, a stock that a lot of people don't realize has been pretty high quality from a dividend growth perspective, but they paid me $16. Target, close to $11. Visa, $25. T. Rowe, $12.78. Broadcom, around $18.58. SCHD, a huge dividend payment of $924.27. We have Waste Management, $19, and then UNH, $31.17. So again, that totaled up to be over $1,100. Now, if we keep moving forward, let's take a look at my daily dividend calendar. Basically, all we're doing is we're seeing how much I made in dividends each day of the month. So we'll zoom in and take a closer look. We can see June 2nd was a nice day, close to $36. The 10th was a nice day. 12th and 13th, $28, $29. The 20th, about $19. $31 on the 24th. 27th, $36.46. And then the 30th was a huge day at $959.01. Obviously, that's the day SCHD paid me, along with a few other days. Now, that's great and all, but what's really cool is when you track this over multiple years, because you can really start to see the growth. For example, we're now about halfway through 2025, but if we look at 2022 when I started using this, I made $1,289 in dividends. So just halfway through 2025, and I'm way ahead of where I was for the full year in 2022. In fact, if we look at where I was in 2023, it was about $3,474 for the full year. I almost made that in just half the year of 2025. And so obviously I'm well on track to surpass where I was in 2024 as well. Now, finally, the last thing that I want to do is see how long it will take me to achieve my long-term goal of one day living off dividends. And this is something I've been able to model out in this spreadsheet. But we need to look at a few different variables. For example, we have my starting portfolio size currently sitting at about $218,000. We're not going to be too aggressive with our assumptions. We're going with a price growth rate of 7% and a dividend growth rate of 7%, and the starting yield of my portfolio is currently around 3.5%. Now, where I am trying to be aggressive is obviously with my monthly contributions, and I will say for most of the past year, I actually have not hit this number, but in the most recent month, I did hit it with my Novo Nordisk position. I'm aiming for $2,500 a month. So let's see what this looks like modeled out. And again, we're going to model this out over a 30-year time period. But before we can actually see what this looks like, we have to know what's the goal, what's the cost of living that I'm trying to pass. So again, I'm going to be somewhat conservative with these assumptions. Obviously, this is going to depend on a lot of different factors. But the key thing we have to remember is your cost of living over time is going to increase because inflation compounds over time just like any other investment. So the goal is to get my monthly dividends above this black line and stay above this black line. And I will quickly mention, this is why it's so important, even if you're buying high yield stocks, to look for a dividend growth rate at least above the rate of inflation. Otherwise, your cost of living will catch up to your dividends. So let's go ahead and jump over to the live off dividends analysis, and we'll zoom out just a little bit. What we can see right here, again, the black line is my monthly cost of living and the red line is my monthly dividend payments. And where the red line crosses the black line is the point at which I could live off dividends forever. So we can see it happens, but let's see exactly how far away it is by coming over here. So to start off, if we start scrolling down, we can see after about 5 years, no, I can still not live off dividends, but my monthly dividends gets up to about $1,853 on average. If we keep scrolling down, we can see after about 10.5 years, no, we're still not quite there, but monthly dividends is about $3,441, so that's definitely enough to start taking it easy if you chose to do so. But if we keep scrolling down, we can see right here, I'm only around 13, really closer to 14 years away from being able to completely live off dividends, and that's where my monthly dividends is greater than my monthly cost of living. Now, you might be wondering, this model is assuming you're reinvesting your dividends. What happens when you stop reinvesting your dividends? And that's a great question. Here's what you have to understand. As long as your dividend growth rate is above the rate of inflation, you can stop reinvesting dividends and still live off dividends forever because your monthly dividends will grow faster than your monthly cost of living will. Now let's look at this at a much higher level. If we jump back over all the way to my investment dashboard, we'll scroll down and look at this on a high level. We can see in 5 years, my yearly dividends, if we reinvest dividends, will be close to $19,500 with a portfolio value of about $563K. If we look in 15 years, my yearly dividends will be close to $73,000. Now, here's what's interesting. If we don't reinvest dividends in 15 years, my yearly dividends would only be about $48,000. In 30 years, if we don't reinvest dividends, I'd be making about $161K, but if I do reinvest dividends, it jumps all the way up to $377,000. That's why reinvesting dividends is so important. So there you go. That's exactly how much I made in dividends from my $218,000 dividend portfolio. Again, like always, if you'd like to be able to download this spreadsheet or get access to any of my other spreadsheets and access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. They're currently running a July 4th sale. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.